Hello traders, Gary Wagner here. Just before noon in Honolulu, 6 o'clock in New York. It is April 6th, 2020, and this is the Daily Report for Gold and Silver. A tremendous move in both equities and gold today as equities rise on a relief rally with diminishing fears of the COVID virus as it lessens a little bit in Europe, and gold moving substantially higher. 1707 is our current print in gold futures, based upon the fact that in the United States, the apex of this pandemic is going to occur this week in the United States. While I think that the possibility that we will see stocks come under more pressure this week still exists, I do believe that we will see gold flourish and rise to higher pricing. And as you'll see on today's technical studies, I believe we've got a straight shot from 1700 to about 1800 in the next 2 weeks. Let's take a look at our price board and then to our current studies. We have seen the precious metals markets, with the exception of palladium, moving strongly up to much higher pricing, with gold futures currently up $62 at $1,707.70. That's a net gain of 3.77% on the day. The spread between futures in gold and spot gold continues to widen. We are now looking at spot gold price, which you can see is up about $46 on the day at $1,662. So we've seen it move from about $30 to well over $40 in terms of the spread between spot and future markets. The only plausible explanation, as I said in our opening letter, is the expectation that this is going to get worse before it gets better. In terms of the other precious metals, platinum was up $19.60. That is a net gain of 2.84%. Silver had the biggest shine today, currently up 81 cents at 1531, and palladium being the only precious metal to close lower on the day, actually dropping by about $26 at $2,079 per ounce. That is obviously a reflection that the auto industry, which heavily uses this precious metal, could be in for some more rocky roads. Let's take a look at our technical studies. Traders, there's absolutely no doubt that we had a clear and defined breakout today as gold breached 1700, the first occasion to do that since the pandemic has started, and is currently trading at 1707.70. What we see when we look at our shorter term 240-minute chart is what is simply known as an inverse head and shoulders pattern. The best way to look at it is to look at this as being the first shoulder, this being the inverted head section right here, and then this being the second shoulder right here. If we draw a line from the recent highs that came in, that come in just about 1703, you can see that the fact that the market closed well above that at 1707.70, which is our current print, indicates a clear and defined breakout above this pricing. I am going to put support at this point at approximately 1700. But the interesting thing is when we'll look at a longer term chart in just a moment, we can see that there is really no technical resistance until about $1,800 on our charts, because gold traded between 1537 and 1800 after coming down from the record highs. And so now that we're back at 1700, there is really no solid technical information to gather except if we go back to the 2008 to 2011 run-up in gold pricing. So traders, we're going to look at a daily futures chart. I've just put up the Henkin Ashi, or Japanese average. You can see that there's no bottom wick and it's gotten very, very long, but an extended range to the upside has created this type of a candle here. Still extremely bullish. As you can see, we have just converted our Henkin Ashi into a standard candlestick chart. When we do that, we can clearly see that current pricing is well above the former prices of both the tweezer tops and this record high that came in on an intraday basis, which I believe was 1703. This came in, this tweezer top, at about 1698. As you can see, I have converted our daily chart now to a 2-week chart. Each candle represents 2 weeks in trading. It's the only way we can look at current pricing and how it reflects to the all-time highs that occurred back in 2011 and the subsequent fall from grace that occurred right after that. The large line that I've put is current pricing at 1707. And this horizontal line will give us an indication of what levels we can look to achieve if we see gold continue to rise. What we see is that we don't have any major peaks really until about 1800, and that's what we said as we looked at our daily. But you can see that in between current pricing and 1800, there's no real top or level on a technical basis. In other words, we are in new territory, or territory only explored on one other occasion, and that is when the market rose to historical highs at 1900 and then the subsequent fall from grace as it then traded for about 2 years in between 1537, that is these lows right here, and these highs up at around 18. That is why in our opening letter, as well as our commentary that we had today, looked at the possibility that we could see gold go as high as $1,800 over the next week, week and a half. Therefore, traders, obviously, we're going to maintain our current long position from 1602. We'll look to raise our stops just below 1700 if and when we see the market continue to climb further on this week. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.